Hello everyone. Today we are going to solve a problem from final accounts. Okay, final accounts is a combination of two accounts and a one statement. Okay, that is trading profit and loss account and a balance sheet statement. So over here, one illustration problem we are going to take as an example, and we will be seeing how to solve this particular problem, what entries has come and where we will be posting it. Okay, so we'll just read once. From the following trial balance of Vikram Foundry Works, prepaid trading account and profit and loss account for the year ending 31st March 2003. Also prepare a balance sheet as on that date. Okay, what we need to do? We need to prepare trading account as well as profit and loss account. These two accounts we have to create. Then we have to prepare as well as the balance sheet statement. So now what data has given, basing on that how to solve that problem we will be discussing. Now the trial balance has given over here of March 31st up to the March 31st 2003. The entries are electricity, land, interest, wages, opening stock, rent, purchases, open office expenses, buildings, salaries, power, gas and water, returns, furniture, datars. All these are debit balances. The credit balances are also has given interest, discount, sales, returns, sundry creditor, capital and a bills payable. These are the credit balances which has given. Both the sides it's being tallied. Okay, both the debit balance and the credit balance are being tallied. Now the other adjustments which has also been given over here, we will be seeing that one. Like adjustments are like outstanding salaries of 10,000, closing stock is of 80,000, depreciation on building at 10% per annum, interest received in advance that is 2,000 rupees, return of bad debts that is of 10,000 rupees. What exactly the thing is to happen is, when all the adjustments, generally all the adjustments used to have dual effect. Okay, two effects. One effect would be in a profit or loss trading account or else a profit and loss account. Another effect, the second effect, definitely in a balance sheet. Like outstanding salaries used to have a effect in a salaries, that is in the profit and loss account. Then another effect used to be in a balance sheet as well. Closing stock used to have a effect, two effects. First used to be in a profit and trading account. Another used to be in a balance sheet statement, asset side. Then depreciate building. Building depreciation used to be have a dual effect. One will be in a profit and loss account, another one will be in a balance sheet statement. Then interest received used to have a effect in a profit and loss account, another one will be in a balance sheet statement. Then return of bad debts used to have a effect in a profit and loss account, another one will be in a balance sheet statement. So all these adjustments used to have a effect, dual effects. Now we'll see how to solve this problem. First of all, we have to divide this particular, like we have to see which entry comes on which account. Okay, basing on that we will be doing, we'll take a help of a pencil just to note down which entry will come on the trading account or else a profit and loss account, debit side, credit side, everything we will be mentioning basing on this. Okay, electricity. Now we can see this electricity. Electricity is an expense, so expenses, based upon the expenses comes under the nominal account. Nominal account rule is debit all expenses and losses, credit all incomes and gains. So based upon that one, expenditures that comes under profit and loss account. Okay, profit and loss account, that too in a profit and loss account debit side. Land is an asset, it goes in the asset balance sheet. Interest paid Okay, interest paid. So as it's showing the debit balance, it means interest paid. Interest paid, profit and loss account. Then wages, it's wages is a comes under the factory related expenses, that comes under the trading account. Opening stocks comes under the trading account. Then rent comes under the profit and loss account. Purchases comes under the trading account. Office expenses comes under the profit and loss account. Building comes under the it's an asset, it comes under the balance sheet. Salaries, profit and loss account. Power, gas and water, trading account. Okay, returns, if the returns has given over here, okay, returns has given over here, like purchases are here and returns has given here, it means it's a sales return. Okay, opposite side it used to give, like purchase, the purchase return will be given over here. Its sales has given over here, in the sense it's a sales return. So sales return, what we will be doing it over here is sales minus sales return. Like sale is of 8 lakhs, 8 lakhs minus 20,000, it will be like 7 lakhs 80,000 rupees. In that way we will be mentioning. Then next, furniture is an asset, it goes to the balance sheet. Sundry debtors is an asset, it goes under the balance sheet. Okay, this is the thing. So in the same way, credit balance as interest received, in the sense it goes to the profit and loss account. Discount received, profit and loss account. Sales, trading account, credit side. Then returns, it's a purchase return. Okay, then sundry creditors, it goes to the liability side, balance sheet. Then capital liability, balance sheet. Bills payable, liability, balance sheet statement. So all these things are going to be posted on their accurate places with the by making this adjustment. Like outstanding salaries, when the salaries are of 90,000, 90,000 plus outstanding in the sense it's still yet to pay in the sense, in the what we need to do, 90,000 plus 10,000, so it will become 1 lakh rupees. In the outer column we will be mentioning 1 lakh. Closing stock, when we create a trading account we have to mention closing stock as well. Okay, this one. Then depreciation, over on the building value will be there. Over here building is of 4 lakhs, depreciation of 10%, in the sense 40,000, 10% of 4 lakh is going to be 40,000. 40,000, what we will be doing, we will be subtracting and we will be mentioning in a profit and loss account, and it will have a effect in the balance sheet as well. Interest received in advance, so advance interest received, this is interest received in advance. Like 16,000 is the whole interest, out of this 2,000 is received already, so that it is going to be considered, this 2,000 is being subtracted and mentioned over here. Return of bad debts, 10,000, this bad debts are being subtracted from the debtors. Okay, debtors, whatever the debtors used to be there, with that sundry debtors, from this sundry debtors 10,000 is being subtracted, and we will be mentioning these debtors in a profit and loss account, and it will have a effect as well in a balance sheet. Means subtraction of 10,000 from debtors 60,000, it will become 50 then. Okay, we'll see how to just to do this. We used to have a format like this. Okay, we used to have a format, trading account, we will be creating a trading account. Trading account is of in this way. Okay, oh, this will be a particular amount. Okay, then particular amount, so debit balance and a credit balance, both the balances we have mentioned. Okay, it is a, so this is a particulars, this is amount, inner column, amount, outer column. The same way, particulars, inner column, outer column. So first of all, when we start any trading account, what we need to do is we have to mention opening stock. When we start a business, whenever the business is being started, stock used to be there. So first, whenever we start a trading account, you just mention opening stock. When we draw this format, you just mention trading account for the year ending March 31st 2003. As it has mentioned March 31st 2003, we are mentioning. Sometimes December will be given, so we need to mention December 31st, whatever the year is. So basing on whatever basing on the things, or basing on the data has been provided, we have to change this particular month and a year. Okay, so opening stock, the first one we will be mentioning, like from this you can see opening stock trading account, whatever the trading account entries are, you just mention over in this. First one, opening stock, that is 20,000 rupees, outer column. It doesn't have any adjustment, that is the reason we are mentioning directly in the outer column. Then we have to check the another one, whatever the another entry which is have related, like when we do the thing like purchases, it starts with the purchases 3 lakh rupees. Purchases are having some returns. Okay, purchase return, that is of 10,000. So that is the reason we are mentioning into the inner column 3 lakh rupees. Purchase return is being of 10,000 over here. Okay, it will become 2,90,000. I will be showing you at the back side definitely. So wait, now you can see this less returns from purchase return 10,000. It has from the 3 lakh rupees of purchases, 10,000 is been subtracted, and the final amount 2,90,000 has been written in the outer column. Okay, in the same way again we will check like what exactly the other things we are having, like after this what exactly the another entries which we have left over, that is related to the wages. We will be mentioning wages. Then we are having power gas. Okay, power gas, these are the two entries which are left over. We will be mentioning wages is of 50,000 and power gas and water is of 30,000. Okay, we will be mentioning power to power gas and water 30,000, way to wages 50,000. These two entries we have mentioned over here. Okay, all the debit side balances which you can see over here, all the debit side balances are over, which is related to the trading account. Now we'll come to the credit side balances. Whatever the credit side balances are, we'll check once, like which is related to the trading account, like the first is sales and returns, sales return. Okay, sales is of 8 lakh rupees, we will be mentioning 8 lakhs. Then return is of 20,000. So what we will be doing, how to just go through with for this entry, by sales. Okay, by sales 8 lakh rupees, then less returns. Okay, whatever the returns are, less returns, that is of 20,000. When we subtract this, like 8 lakhs minus 20,000, it will become 7 lakh 80,000. Okay, then whatever the other entries are related with this particular trading account, we have to check once, like is there any other entry which is related to the trading account? No, we don't have. Then we need to check this one, that we should not forget to just to mention this closing stock over in the trading account. Okay, trading account. Finally we will be mentioning by closing stock. Okay, closing stock, what is the amount? It's of 80,000. You just mention 80,000. So what we need to do, we need to add this side, and we need to add whatever the external column we were having. Okay, outer column, like 20,000. We'll use a calculator. Okay, uh, it's 20,000 plus another one, that's of 2 lakh 90,000 plus 30,000 plus 50,000. It's coming as like 3 lakh 90,000. Okay, 3 lakh 90,000. This is 3 lakh 90,000. Let it be. Now we'll check the other side. We are having 7 lakh 80,000 plus 80,000. Then is there any other entry in the another way? No. So that 8,60,000. So 8,60,000 minus whatever the amount we were having at the debit side. Okay, debit side. It was 3 lakh. Okay, 3 lakh change. So that again we will be calculating. Okay, directly we'll just mention subtract from this, like 20,000 is being subtracted minus, then we'll subtract 2 lakh 90,000 minus, then 30,000 subtracted, then 50,000 subtracted. It will become 4,70,000, the same which you are having. So what you will be doing, this particular 4,70,000 will be mentioning as gross profit. Okay, to gross profit, this is 4,70,000 rupees. This is considered as a gross profit. Now this gross profit, okay, why is that we are mentioning gross profit? Basing on this one, like all this debit balance and a credit balance. Okay, debit side and a credit side balances. If all the debit side balances are your expenses and all the credit side balance are your incomes, okay, your incomes are more than your expenditure, so that is the reason you are mentioning as a profit. Okay, if your expenditures are more than your incomes, then you will be writing by gross loss over on this side, by gross loss. Okay, whatever the difference amount is, you will be mentioning over here, and you will be mentioning by gross loss. But the thing it is, you are in a profit, that is the reason by gross profit you have mentioned over here. Now whatever the remaining entries we are having, this is up to, this is over here itself, the trading account. Now this gross profit is being transferred to the profit and loss account. Okay, profit and loss account in the opposite side, because profit and loss account means this trading and profit and loss account deals with, means it works over on nominal account basis. Okay, over on the principle of nominal account, like debit all expenses and losses, credit all incomes and gains. Okay, debit all expenses and losses. If expense or loss used to be there, like if gross loss used to be there, then we will be transferring this entry to the debit side. Credit all incomes and gains. Okay, now we are having a profit, so we are going to transfer this profit to the credit side. Okay, now this is being transferred to the opposite side. Okay, the same amount 4,70,000 is being transferred to the opposite side, over on this side. Now we'll see, this is profit and loss account. Now this is a profit and loss account. What the profit and how the profit and loss account is to be created, we'll see. First box, the same box we are going to prepare, particular amount. Okay, this is a box which we are going to prepare. Now this, in this format, all debit balances, all credit balances. Debit balances which we have seen over here, like already we have mentioned over here, like what entries used to come on this particular debits, profit and loss account and trading account and balance sheet. Basing on that, like wherever the PL we have written profit and loss account, we will be just writing on the debit balances, then we will be writing on the credit balances as well. So PL, electricity, first electricity 14,000 we will be mentioning. Okay, first we will be mentioning electricity. Okay, 14,000. We'll go for the next entry, that is interest. Okay, interest, what interest, how much interest is 16,000, the same 16,000 interest we will be mentioning. Okay, interest we have mentioned. Then next entry, that is related to the rent. Rent is of 24,000, we are mentioning rent 24,000 on the debit side. Then next, office expenses, Okay, office expenses, directly we are mentioning office expenses. How much office expenses are these of 30,000? Office expenses 30,000 we are mentioning. Then next one, salaries. Okay, salaries, we are having salaries of 90,000. So salaries are having another one that is related to the outstanding. 90,000 of salaries plus outstanding salary. You just see salaries of 90,000, add outstanding of 10,000. Okay, in a inner column it will become 1 lakh in the outer column. Then after this, check for any other profit and loss account entries. Is there any other? No, we don't have any other over here. Now check in the adjustments. Check in the adjustments. Like salaries is done with, closing stock already done with. Then depreciation. This depreciation entry will have an effect in the profit and loss account. So 10% of depreciation on building amount. So building amount is of how much the building amount is? Just check once, 4 lakh rupees. 4 lakh, 10 10% of 4 lakhs. So 10% of 4 lakh is 40,000. Okay, 40,000. This 40,000 is going to have an effect over here. You can see depreciation, to depreciation on building, that is 40,000 we will be mentioning. Then next check another one which can come over here, like return of bad debts. Okay, bad debts of 10,000. Excuse me. Yeah, bad debts of 10,000. So 10,000 is going to be mentioned over here, like two bad debts, 10,000 rupees. So check once again, is there any entry which is left over which should come over on the debit balances? There is nothing. Then let's go for the credit balances now. Chalo, now we are in the credit balances. We'll check with the credit balances what the credit balances may come. Like the first entry, definitely the balance, sorry, gross profit is being transferred in the profit and loss account by gross profit brought down. Okay, BD will be mentioned, brought down. This is 4 lakh 70,000, the same amount. Okay, now check for the credit balances. What exactly the credit balances are? Like the first credit balance, which comes under the profit and loss account, that is interest. Okay, this is interest received. Interest received was having one adjustment. Okay, interest received was having one adjustment. Over here you can see this fourth adjustment, interest received in advance. Okay, so interest received is of 16,000. So advance already he has took the advance as 2,000 rupees. So what we will be doing is we will be mentioning 16,000 in the inner column, we will be subtracting 2,000 in the inner column, and we will be mentioning 14,000 in the outer column. Okay, we'll show you how to just solve this one, this adjustment. Like interest, see, interest received, by interest received, how much the interest received is 16,000 in the inner column. Then what we need to do, less received in advance, interest received in advance. How much the interest received in advance is 2,000 rupees, we have seen there in the adjustment. So we, what we have done, we are going to do, we are going to subtract this, then we are going to mention this amount in the outer column. Okay, then discount. Okay, the another entry is discount received. Okay, this is discount received. So how much it is? It is 6,000. So discount received we are going to mention 6,000. Then check for any other entry which is related to the profit and loss account. Nothing, no other entry we can see over here. So what we will be doing, we will be adding all these entries and all these entries. Okay, whatever the entries up to over here, whatever the entries were there, we are going to add. Okay, now we will take the help of a calculator to just to calculate this figures. First we will calculate the credit balances, that is 4,70,000 plus 6,000 plus 14,000. So this has come as like 4,90,000. We'll keep it aside. Then we'll calculate the debit balances as well, that is 1 lakh, then 14,000, then add 16,000, sorry, then 24,000, then 10,000, then 30,000, then finally 40,000. It has come as like 2,34,000 rupees. So 2,34,000 is being subtracted from this bigger number, that is 4,90,000. Okay, 4,90,000 minus 2,34,000 rupees. Okay, 2,34,000. It has come as like 2,56,000. So this is your net profit. Like your incomes are more than your expenditure. So this is your net profit. Okay, you can see this particular 2,56,000 is your net profit. Okay, what we are doing, we are going to write this 4,90,000 both the sides, whichever is the bigger number we are going to write it on both the sides. We are making it tally. Then for making it tally, whatever the balancing figure is, okay, what we have done, we have added this, we have added this particular thing is being it's a balancing figure to just to make it a total the same. So this balancing figure will be called as net profit. Okay, your incomes are more than your expenditures, so that is the reason you are in a profit. If your expenditures are more than your incomes, then what is going to happen, you will be in a losses. So this thing, this net, you got it a net profit over here. This particular thing is being transferred to the capital account, that is in the balance sheet liability side. We'll check once, like how to just transfer and other things we'll just discuss. Now we'll check like how to prepare a balance sheet statement. This is a format of a balance sheet statement. Liability, asset. Okay, two columns used to be there, liability and asset. Liability, left hand side, L stands for left hand side, L stands for liability. Many a times the people used to do mistake, like they will be starting asset from this side, but don't do that one. A simple way to remember is left hand side. L stands for left hand side, L stands for liability. So this particular thing, liability used to come on left hand side, asset used to come on the right hand side. So liability and assets. So under that, liability amount, asset amount, this is the thing. So the heading will be written as like balance sheet as on. Okay, balance sheet, the name of a particular person needs to be mentioned, where whatever the name is, like if it is a particular company name as given, so you just write the name of a company name, like it was a Vikram Foundry. Okay, it was a Vikram Foundry works. You can see on the top Vikram Foundry works. So basing on that, Vikram Foundry works balance sheet as on 31st March 2014 or 2003, whatever the date has given. Basing on that, you just mention it. Okay, now what exactly it is going to happen, how to find, how to solve this problem, we'll discuss. Like long term liabilities and current liabilities, these two things are going to be mentioned. Generally what we will be doing is, there will be a process like how to just do this particular thing. Like Always whenever you are doing this you are dealing with the capital, what you need to do, first you just take the capital amount, whatever the capital the business has started now. So capital amount, you just check what exactly the capital amount is in the liabilities, like credit balances liability. Okay, that is 3,02,000 rupees. This 3,02,000 is to be written in the inner column. Okay, in an inner column you have written in an inner column. Then what you need to do, whatever the profit you had, net profit you had, this particular thing, if you are having a profit, you add net profit. Okay, this is a process is to be followed. Add net profit. How much the net profit is, that is 2,56,000. So in capital you are going to add 2,56,000, it will become 5,58,000. If just I'm giving the example, if you had a loss over here, okay, just imagine you had a loss over here. So what you need to do is you have to less, okay, you will be less, you are going to subtract whatever the amount is. Like just imagine it's you had a loss over here, so if it is a loss, then you will be subtracting 2,56,000 from this 3,02,000 rupees. Okay, and whatever the remaining amount is, you will be writing on the outer column. Okay, in this way you will be doing it. This is the thing, but directly don't write it the in the outer column. You have to check, is there any drawings in a problem. Okay, if any drawings has given, the process will be like this. After this, add sorry, less drawings, less drawings, whatever the drawings are. If it is drawings are mentioned, you just mention the drawings, or else you just mention 0. Then after that you subtract this, whatever the amount used to be there from this particular amount, you just mention. Like if it is a 5,58,000 you have seen over here, so 5,58,000 minus drawings. If my drawings are 0, in the sense directly the final amount used to be like 5,58,000, this 5,58,000 is going to be remain same. If the drawings has given us like 58,000, so what is going to happen, you will be subtracting 58,000 from 5,58,000. So your 5 lakhs is going to be in a outer column. So this is your capital. Now closing balance, it is to be considered as a closing capital. Okay, closing capital. Now capital, you are having a capital. Now what you need to do, you have to check other entries which can come in a liability side. Check for the liability side entries. Sales won't come. Creditors, you are having a creditors and bills payable. Creditors is of 60,000, bills payable is of 15,000. You just see sundry creditors. Okay, sundry creditors of 60,000, bills payable is of 15,000. Okay, these two entries you have mentioned. Check for any other entry which is there. No entries are available, so just go further with the this particular adjustments. Under this adjustments, see, outstanding salaries, whatever the outstanding salaries you are having, this particular outstanding salaries are being used, like it is going to be mentioned in the liability side. Whatever the outstanding salaries or outstanding expenses, all outstanding things will be mentioning over here on the liability side. Like 10,000 outstanding salaries are being mentioned over here. In the same way, you just check any other, like interest received in advance, it is kind of a liability. Okay, liability for the company. That is the reason that 2,000 has been mentioned, interest received in advance you have mentioned over here. Okay, is there any other entry which is to come? Nothing. So we'll check, go for the asset side. Now under the asset side, what exactly the asset side we are going to do, we will be checking the asset balances. Okay. Now you just go further, we'll check with this, like any assets, like under the assets we are having fixed assets and the current assets. Okay, fixed assets, all the fixed, whatever the fixed assets are we'll just mention, and whatever the current assets are we will be mentioning. Like we'll check like land. Okay, land is of 1,40,000, the same land as mentioned 1,40,000 over here. Okay, then go for the another thing, like where exactly a I have written a asset. Okay, building, building is of 4 lakh. Building was having a depreciation. Okay, depreciation 10%. Building is of 4 lakh less for 40,000. 10% of building value. 4 lakh 10% is going to be 40,000. 40,000 is being subtracted and remaining 3 lakh 60,000 has mentioned over here. Okay, this thing. Then check for any other entry. Then you see furniture. Furniture is of 15,000. One minute. So furniture is of 15,000. You can see furniture 15,000 over here we have mentioned. Then another one, just check any other, like sundry debtors. Sundry debtor is of 60,000. You just mentioned sundry debtor 60,000 in a inner column because we are having return of bad debts. Okay, write off bad debts we are having, that is of 10,000 rupees. What we need to do, we have to subtract this 10,000 from the debtors. Okay, 60,000 minus 10,000, it will become 50,000. Okay, 50,000 we have mentioned in this way. Then check for any other entry which is available in a particular account. We don't have any other, but don't forget to mention closing stock. Okay, closing stock is there in the adjustment. Okay, always this entry used to have dual effect. Okay, one used to be in a trading account, another used to be in a balance sheet. So you just mention the closing stock as well, that is 80,000 rupees. This one 80,000, you can see 80,000. Now what you need to do, you have to add all the liability side, all the asset side. Okay, you should get, the answer should be tallied without having any balancing figure. Okay, without having any balancing figure, we'll take a help of a calculator and we'll see whether our answers are matching or. Okay, just we'll have a look. First we'll calculate the liability side, that is 5 lakh 58,000, then 60,000, then 15,000, then 10,000, then 2,000. It has become 6 lakh 45,000. Okay, this is the liability side, 6 lakhs 45,000. Now on the asset side as well, it should be the same without having any deviation, without making any alteration or differential amount. Okay, now first one, that is 1 lakh 40,000, then 3 lakh 60,000, then 1 lakh 50,000. Sorry, it's 115,000. Furniture is of 15,000, then 80,000, then 50,000. You got 6 lakh 45,000. Okay, both the places you are getting 6 lakh 45,000. It means your balance sheet is tallied. Okay, it means your balance sheet is tallied. You are accurate now. In this way you have to do balance sheet final account. Okay, final account, the balance sheet should be tallied. It means you have done problem without any mistake. Okay, thank you for watching. Bye bye.